The interview you're about to listen to is with Alex Spiroglou. Alex happens to be an expert market technician. In fact, he's won various awards for his research within the subject matter, and on top of that, he's also a very accomplished speaker/presenter, which is basically a roundabout way for me to say that you're very much going to enjoy this discussion. Obviously, let me know your thoughts in a comment below. How are you doing today, Alex? I'm very excited to officially digitally meet you and have this conversation because I think it's going to be very enlightening into the world of traders. So how are you doing?
I'm very well. Thank you so much for the opportunity of this interview.
Oh, well, thank you very much for your time. Definitely.
It's a pleasure and an honor being here because I've seen quite a few of the interviews conducted with other interviewees on your YouTube channel. And I must say, you are doing one hell of a show. You're doing very well.
Ah, shucks. You're going to make me blush. Well, please correct me if I'm wrong, but I searched you up on the internet and it defines you as a quasi-systematic trader. But really, from what I saw about it, you seem to be more of a type of a man who's just really crushed it in the world of trading. You are an award-winning market technician. I believe the Founders Award and the Charles Dow Award. Obviously, you're an accomplished presenter. You've been on many podcasts. I believe you go kind of international to teach what you know about trading and just like a litany of successes. So am I missing anything there? Because you kind of seem to be a guy who's like the kind of person who teaches top traders how to trade. Is that a fair characterization?
Well, let's just say I prefer to say I just share the few things I know about markets with people and hoping to make their trading journey easier and smoother than I had one.
So when did you actually start trading? Before we get into all the nitty gritty, and I really do want to dive into the indicator that you kind of improved upon and use it for your own skill set. But like, obviously it's one thing to look at successful traders and investors now, but I think the really interesting thing is the journey. So obviously I believe you studied finance back in college, but were your parents trading before that? Did you have the bug really early on in life, or how did you even get into the world of trading?
Well, that's a good question. Well, first of all, let me say that my father was working for Bank of America in Greece. So he was a banker, and he actually went to London for some further training. And he saw the trading floors and the dealing rooms there. So he said, "Son, this is, I think, what you should go into." So although I really didn't understand when he first mentioned this, I was probably like 15. I was like someone who tried to get the approval of and impress their father. So I said, yeah, okay, I'll do that. Although I literally didn't know what he was talking about. But I was into finance and economics in general. So when I went to City University in London, which is probably one of the business schools in London, during my last year, there was a professor called Roy Batchelor, which actually, funny enough, I'm still in contact with, and I'll tell you that's a big story. And he, at that time, that was like 1995, he did an elective course called forecasting, and part of it was technical analysis. And that was my really first moment with technical analysis and price action. I fell in love with it ever since I saw that. So consciously, my choice to go into trading was like 1995.
And then, so obviously from 1995 until this point in 2023, it's been a whirlwind because you're not just a guy who's trading futures exactly on your own at your computer. Obviously, you do that. But beyond it, you've worked with a litany of impressive people. You've given all these presentations. Like, you are very much you have literally an award-winning paper on your own personal improvements to the classic MACD indicator. So for you, were you always a math interested person? Were you the kind of person who always liked solving puzzles, or is it more of the competitive thing? Do you have like a sports background where you just liked winning and the fact that you were winning money, a little combo of the both? Like, what's kept you in this game for now multiple decades?
I think it was a personal challenge and interest. I've never been inspired by seeing myself competitive with others. Actually, probably I'm the opposite. I like sharing with people, and I like whatever I have done to be like sharing, because I think, like they say, knowledge is the only treasure that increases by sharing. So I've never been a competitive sort of person with it. Maybe perhaps competitive in the sense of like competing with myself. But I really love this sport. I mean, if you want to call it a sport, I've always been intrigued by markets, trying to increase my knowledge, learn more about it. And sometimes I've always been joking that it's something that I would literally do for free. So to answer your question, I think I have a pure love for the game, nothing more than that.
Hey, I completely appreciate that. Is there a particular moment in your trading career, and I'm thinking early on, that maybe you had like a big win or maybe a mentor or something like that, where you were like, oh, this is for me? Like early on, was it just exclusively study, or did you just kind of hop right in, like just a leap of faith, and you're like, hey, I'm going to trade like right away? Because I think so many people, especially in a similar situation to me, we start out as retail and there seems to always be beginner's luck. But after that, usually there's a rough patch. So like, did you have a drawdown where you were just kind of getting beat up by the markets, or was it kind of success off the start because you had a proper mentor? Like, can you explain a little bit to the audience of like really that starting stage for you?
Well, my starting stage, well, actually, after that I finished university in 90, graduated in 1996. For 2 years, I went and did my military service. So I got discharged as a second lieutenant with the rank of second lieutenant. So after that, I immediately found a job within the financial services industry. Now that was in mid 1998, and that was the tail end of a huge bull market. So as you can see, that was probably the worst time to get into markets, because it was the easiest and most fertile environment to confuse, as they say, brains with a bull market. You could, I mean, the trend was so strong, you could literally buy something in the morning of the session, and then by the end of it, because the trend was up, you would have made money anyway.
Reminds me of 2022, just everything 2021, 2022, all that quantitative easing, just everything kept going up and up and up.
Something similar there. But when the market started turning, I started losing money. I also did blow up my account. So I did have some rough patches. Now, the only thing that kept me in the game was that, of course, my love of it, that I was studying, that I had people around me to give me some guidance and to start applying what I had learned. And then I was able to recover and learn from my mistake, because I've always had a very positive feedback loop from what I do. So yes, I did have my share of failures, and that was not the only failure that I had. Later on, I had also very bad trades, either because of my mistake or because the market gapped up against me, bad luck, if you want to call it like that. But yeah, I mean, I'm always trying to learn.
Man, I think that's, out of all the successful traders I've talked to, the one common thread that really they all have is always curious about like the next thing, that no one's really set in their ways. It's not a rigid thing. It's like, I want to learn more. I want to learn more. And like, it's interesting that you say that. Now, I would love to actually learn a thing or two off maybe some of your not so successful trades. But before we do that, just to set a little framework here, how would you define your own trading? Are you an investor, medium term, short term? Are you a swing trader? I know you trade futures. Has it always been futures, or is it a little equities? Have you ever traded crypto? Like, what's your main go-to trade right now? Like, what are you trading and what's the duration?
Well, I started as an equity shares stocks trader. I think that lasted probably for about a year and a half. And because of the bear market that started in 1998, I thought that the only way for me to profit was if I switched to futures. I started first of all with equity futures, and then I wanted to diversify. So probably around 2000, I would say I've been a purely futures guy, and I've never ever looked back. So as far as the the instrument is concerned, since 2000 I've been a futures guy. Now my style has evolved over the years. I found that in order to combat my urges, one hand, and on the second hand, to be more disciplined in what I what I wanted to do, I started documenting my procedures. So that was my initial step. The second step was not to just document, but also test, because you can document and say, okay, I'll be following XYZ rule, but unless you test it, you don't know if for sure what you have documented actually works. So my approach has actually morphed into kind of what I am right now, and I like to call it semi-systematic, in the sense that I follow rules. I'm rules-based, but also keep an element of discretion. So I'm not purely mechanical, and of course I'm not purely discretionary. And with that, I mean, I try to test my ideas. My time frames are on the daily time frame, although my approach is called multiple time frames, multiple factors, because although I do trade on the daily charts, I also check the macros on the monthly and weekly charts. And the holding period of my trades is, for my swing trades, it depends on the strategy. The swing trades can be anything from 1 to 3, 4 days. Or if you have some strategy that I want to be holding a bit more, it can go up to 2 to 3 weeks. But that's it. I mean, in general, you would classify me as a short-term trader, although not an intraday trader.
Out of my own curiosity, your system, obviously, as an accomplished technician, you're looking at a lot of technicals. And obviously, we're going to get into your own improvements on top of the MACD. But before we do that, is your entry and exits, whether discretionary or like systematic, is it all technical? Or are you also taking in, for example, inflation reports and GDP numbers? Do you take those into account? Or do you find that it like kind of messes up your bias and you'd rather stick exclusively to price action?
No, my method is multiple factors and multiple time frames. And I say this because I think each time frame has its own return drivers. So there are different factors affecting the monthly chart, different on the weekly and different on the daily and different on the intraday chart. So I do combine macro and technicals. And because, I don't know, maybe I'm a curious person, but the thing is, whenever I see price action, I want to know why this happens. What are the return drivers for each move, and how you can have a better selection of trades. So I do filter out a lot of my technical setups with fundamentals. I try to combine them. So coming back to your the second part of your question, yes, I do look at macro like GDP and employment reports, but not just look at them in the sense of, oh, is it high or low, but also quantifying them. Yeah, these are just data series, and you can do manipulation on the data, and you can see how these. Now that you mentioned inflation, you can take out, for example, the CPI numbers, apply a short-term moving average, and as an exercise, you'll see that whenever the inflation number is below the moving average, the market performs much better than it is above it. You can have it as, I wouldn't be using it as a purely mechanical system, but it will give me a very systematic, a very disciplined way of seeing if inflation is high, low, or if it's rising, or if it's falling, rather than whatever one says on the news.
I think that's a very fair point, and I appreciate you sharing that. Before we move on to the next thing, just very quickly here, a lot of the people watching this, they probably heard of futures trading, but they probably haven't engaged in it themselves. So beyond the fact that you have found success when trading futures, is there another aspect of it that you like? I mean, many people know that it trades bigger hours, longer hours. Is that something you enjoy? Is it the leverage you enjoy? In the US, which I know you're not, some of the future traders I know only found out about it because they don't have to battle with pattern day trading, which is kind of the bane of many retail traders' existence here in the US. So beyond the fact that you've found success, is there something about futures that you just find to be advantageous?
Yeah, that's a good question. Well, actually, there are a lot of advantages to futures trading. First of all, I found that it's very good for macro analysis. For example, if you want to be looking at corn futures or crude oil or bonds or FX, there are a host of macro factors that you can look at and quantify in order to see if the market should be bullish or bearish. Now, another thing is futures markets in general, because they are big markets, they may have more leverage, but of course the leverage is known beforehand, so you can always through position sizing or other techniques, you can control it. But what I found is the advantage they have over stocks is that they have less volatility. Even if, for example, if you take the S&P 500, the S&P 500 volatility is probably a third or even a fourth, of course, depending on with which share you are, a component share you are comparing it with. But you'll find, so I found volatility is much more manageable.
Interesting.
Plus, I have a finite, a smaller universe in the sense that I'm looking around, 40 to 50 markets. So with shares, I mean, you can literally have like thousands and thousands. So I found myself more concentrated on a few. Then I can see the interplay with them. I can have bigger diversification. So I found they made a lot of sense from my point of view.
Yeah, definitely appreciate you sharing that. Now, obviously, I'm not going to sit here and ask you to give away your secret sauce of how you crush it in the world of trading, but it does seem like one of the ingredients within said recipe is something that you've created called the MACD-V. So the normal moving average convergence, divergence, an indicator that probably everyone watching right now knows about, but you put your own twist on it, the dash V part, where, please correct me if I'm wrong, you're literally the creator and the expert in this, but I believe you normalized for volatility. So this is your indicator. Can you tell us a little bit about it? Are you still trading with it today? Do you still absolutely love it? Are there downsides? Like, if you had to explain to another trader at the bar what your indicator is all about, what would you say?
Right. Well, I created this in 2015 out of the necessity to create a momentum tool. And I specify a momentum tool because in general, I believe that there are probably more indicators than traders.
I love that.
So I'm a big fan of using just one tool to do one job. So as far as momentum is concerned, and I specify this just for momentum because you can't use it for other jobs. In general, momentum, you can classify, if you do the taxonomy of momentum indicators, they can come in two broad categories. One is range-bound indicators. They have a finite number of values they can have. For example, like the stochastics or the RSI, they go usually from 0 to 100. Or you can have unbound indicators, sort of like the rate of change or the MACD. So these are the two broad categories. Now, each category has its own strong and weak points. So when I first looked at this, I wanted to say, okay, how can I create a hybrid indicator that is the best of two worlds? Has the advantages of range-bound indicators, which means they have a scaling, which can be applied to all markets. And how can I have the advantage of a range-bound indicator, which the advantages they have is that they're not limited to a 0 to 100 scaling, which means as the market expands, their value can expand as well. Something that you will not see with range-bound indicators. If you go to any environment of a strongly trending market, the range-bound indicator will get pegged at high levels and will stay there. So you will see the market going up while the indicator being flat at very high levels. But when you go to an indicator that is freely to range, you will see it expanding with the market. Now, the problem with these types of indicators, of course, is that their numbers, because they're absolute price indicators, their numbers cannot be compared across time and across securities. So the absolute value of the MACD for the S&P 500 is different than, for example, EURFX. So with these two limitations and cons, I thought, okay, there must be something better. So what I did is I tried to take an unbound indicator and normalize it and create it on a scale. So that's how to cut a long story short, the MACD-V came. It was purely my intention was to create a tool that I could use for myself. That was 2015. I hadn't disclosed it to anyone, not for lack of, because I didn't to keep it proprietary or anything like that. I just didn't. It never occurred to me up until sometime 2022. I said, okay, I'll write a paper and disclose it like this. I might get some third-party validation, and I won 2 awards for it. And I've been getting very good feedback based on the users.
Do you still use that tool currently in your trading? Like, were you looking at it today
Yeah,
when you were looking at the markets?
absolutely. I have, as far as momentum is concerned, I have replaced all other tools with this one. And now my focus is how to make new techniques out of it. I mean, the tool is there, but how can I find new ways of using it? Now, and I'm specifying for momentum because for trend definition, volatility, relative strength, and so on and so forth, I use other tools. But as far as I'm concerned, yeah, absolutely. I use it on a daily basis.
Would you mind maybe shedding a little bit of light on some successful trades using it and maybe some trades that didn't go your way, but you learned a lesson about it? Is there anything that comes to your mind where like, okay, big learning lesson, but maybe also more of a positive story where like it worked out, you rode a trend for a while and made like a huge bag on it?
Yeah. Well, to tell you the truth, the more memorable trades I've had were losing ones. So I'll just focus on it because I think these were probably more educational for me and also probably for your audience rather than being braggadocious about what I've done. And so let me say, I've had some. Let's okay. So let's say right the in general, I think trades can be classified in four ways. You can win big, you can win small, lose small or lose big. Now, your definition of big and small has to be in what the late Van Tharp used in terms of R multiples. So if you lose 1 unit of risk, and the unit of risk can be, for example, say, I'll be losing 1% of my account on a trade. If you lose more than that, you like, for example, 2 hours, 3 hours, 4 hours, that's a big losing trade. So as far as big losing trades I've had some who were just the market got gapped up the next day because of a news item. There wasn't much I could do other than just take the loss. But there have been a few which were absolutely my responsibility because I canceled my stops. For example, the most memorable one I had, I think it was probably around late 2007, 2008 in DAX. I was long DAX. The market went against me, and I had the brilliant idea of canceling my stop order because I thought the market would eventually go my way. Well, actually, it didn't go my way, and as you can probably imagine, I bled through the ears because DAX is a very big contract. And by the time, as the lingo is, I puked out, I got stopped. Funnily enough, just for the markets to punish me and teach me some humility. After a little while, the market started rallying. Now, I had a few trades like that, but it was always a good lesson for me in the sense because sometimes I get asked, should I use mental stops or hard stops? And I say, yeah, if you want to go mental, use mental stops. So that was actually
I love
not
that.
just a good lesson, more like a reminder, because by that stage in my life, I already knew it. But don't ever use mental stops. Always use hard stop. Place the physically in the market. Don't obsess about they may out to get me or they're trying to run my stops and stuff. Just use it.
You bring up a really, really interesting point. So obviously you're an expert technician and you've taught this to top institutions, to billionaires, to some of the best individual traders in the world. You run in that circle. What happens with you personally, but also that group of exactly that, the discipline aspect of trading? I've said this in previous interviews, but it's one of my favorite things it seems like a lot of trading is 70% discipline, 20% skill, and 10% luck. So that discipline thing, obviously now that you've done this for decades, is there something you do? Is there a trick of the trade to keep the train on the tracks in terms of discipline? When you have your entry rules, ABC, your exit rules, XYZ, we all get that little fear or that greed. Do you have a piece of advice for that? Because I feel like, honestly, after you learn some of the rules of trading, the hardest part truly is discipline.
Yeah. Well, actually, there are quite a few things you can do. And the good thing is, yes, it can be taught and it can be achieved. And I think it's relatively easy. Well, the first thing we have to have in order to have discipline is to eliminate doubts. Because if you start second guessing yourself, then you will be more disciplined. In order to start second guessing yourself, is you must have a trading plan. If you're constant, if you're not driven, if you're not rules based, if you're not model driven, then you will start hesitating and getting in and out with every news item that is available in the market. So the first thing is to have a plan. That sets up the base, if you will, for discipline, because you say, all right, let's give me a very simple example. If the market is above, let's say, the 200-day moving average and the MACD is below threshold level, that I will get in. That in and of itself gives you the background of discipline, because you won't be saying, should I enter here or should I enter there? You won't go from forecasting, you go to if-then analysis. If this happens, then I will enter. Now, once you have that, then there are, the second thing you can do is have small position sizing. If you don't have a lot of money in stake in the market, that will decrease immediately your emotional association with this particular trade. Imagine, like, let me give you a very hypothetical example. If you had a trade, the exact same trade, and on one side you were risking $1, and in the other you were risking $1 million, and I ask you to manage the exact same position, which one would you be more prone to be less disciplined with?
I mean, the $1 million one, my emotions would be all over the map, because like the slightest move would either make me euphoric or depressed.
Exactly. So the second thing is, first of all, is have a rule set. The second is to try to decrease the emotion, your emotional involvement with your position, so have a small position size. And the third thing one can do to have more discipline is what I call RBT, repetition-based discipline, RBD, which means if you do it over and over and over again, then after a little while, you won't think of it too much. Now, of course, the way to do it, to practice, is on a demo account. And I know most people frown upon it and say, okay, I mean, it's not a real thing. And my reply to that would be, you get 80% of the experience with 0% of the risk. So the more people practice using a trading plan and small position sizing, after a little while, you desensitize your reaction to the markets. To give it via another example, imagine watching a thriller, and the leading person comes in with a knife, stabs someone. Obviously, the first time you see it, you get scared. Now, imagine if you see the same thing 30 times more. After a little while, you know what happens, so it doesn't really scare you. So I think by following these three steps, people can gradually build discipline.
I would implore anyone listening to this for a more in-depth conversation to probably look up things such as Kelly criterion, and that's just like betting of how much you should risk, shouldn't risk, and that's what Alex is referring to here with the R value. On that note, for your account, what is your unit of risk? Is it 1%, 2, 5, 25, 50? What do you find is mathematically appropriate to risk per trade?
That's a good question. Well, I think position sizing is you can see it from 2 points. One is the purely mathematical point. The second is the emotional point. So I try to approach it from the emotional point of view, in the sense that, are you trying to maximize risk because you have different position sizing algorithms for that? Or are you trying to, maximize your returns or trying to minimize your risk? As far as I'm concerned, I'm always trying to minimize my risk. So from a mathematical point of view, I may not be taking the optimal position sizing, but that's the right answer, the perfect answer for me. But for someone else, there may be a different perfect answer, because they may be actually trying to maximize the reward. So the mathematics of position sizing, which of course the definitive book and work on that is by Ralph Vince, great guy, really, really great guy, will lead you to different numbers depending on your profile.
Is it not maybe for you individually, but maybe from what you've seen in the industry? A lot of what I've consumed is basically saying never risk more than 2% of your portfolio. Do you find that to be somewhat true in that realm? And I'm not saying exactly, like, is that how, let's call it, like, the big players actually think of things, or are they going even smaller, even bigger? What do you think, like, the normal is?
Again, I think it would depend on the risk preferences. It, my answer would be different depending on the person asking me. So if someone who is completely new to this and wanted to learn, I would say that's probably a bit too much. But if someone who is a professional, and there are different ways to hedge your risk, for example, taking a large equity position, you can always use options to hedge it. I mean, so 2% might be, you can minimize that risk even if you had a larger position than 2%. But if we assume that the question is asked by a retail trader who's just trying to get some skin in the game, trying to learn, I would say probably stick to 1%, because even for a retail investor, depending where they are on the learning journey or the learning path, probably position sizing would be different. So it's better to start on the conservative side and start increasing it, because when you start to learn, your position sizing should be very small, because you don't want to get discouraged. What you actually want to do is get the repetition, and you try to do it as safely, because it doesn't affect your confidence. So have position sizing in a very safe environment. As you start building some kind of consistency, then you can flirt toward higher risk numbers, which again, your risk tolerance has to be, it's a function of your character and also your age. For myself, I'm almost 50 years old now, so I have some years to risk capital. But if I was like probably in my 60s or 70s, then it would make sense for me to be risking too much on each particular trade.
And just to get ahead of any confusion, I just want the listeners to know that when we're talking about that risk value, it's commonly relative to your account, not the trade. It's not like if you buy a stock and it goes down 1%, it's not like we're necessarily campaigning. Correct. It might be appropriate to get out, but that's not what we're campaigning for.
Absolutely.
We're talking about the whole account. With that potential novice audience in mind, once again, not asking for your secret sauce, but is there a basic strategy that you think would be a good place for people to get started? Like maybe the 10 crossing over the 20, getting in, and then when it crosses back, getting out. Is there just like a rudimentary one where you're like, hey, folks, start here as step one and kind of grow from that tile?
All right. I will answer your question, but before that, I will give you the background so I can like hone it in.
Perfect.
I don't believe in the secret strategy or the super strategy. What I believe is having in diversification across strategies and across markets. So my idea of my approach towards risk management and diversification is using multiple strategies across multiple markets. Now, strategies can be categorized in four different profiles, and each one has different trading statistics. So for someone starting out, I would suggest that they pick one that has higher probabilities of being correct. So with that in mind, I would probably go for pullbacks. That would give you a way to more quickly increase your capital, and also more not just your financial, but also your emotional capital. So one strategy that could use, for example, very simple one, use the MACD. If a market is above the 200-day moving average, and the MACD is below the 50 level, preferably the 100, start looking to go long. You'll find that it's a very high probability trade, especially for markets that have a very heavy trend bias like equities or bonds. So that would be very simple. Of course, I would never use that just on its own. I would try to combine it with fundamentals and stuff. But I'm just giving a very quick strategy for someone to toy with.
Yeah, no, that sounds great. You brought up something that you just referred to as emotional capital. Can we dive into what you mean by that?
Yeah, I mean, well, the thing is, psychology is, as you very correctly mentioned before, is a big part of trading. But we all have finite amount of emotional resilience, our financial capital, which we must protect even more than our financial capital. because money you can always make up, but if you lose your confidence, it's very difficult to come back. So both have to be protected, and there is a correlation, a relationship to losing money and losing a bit your confidence. So that's why I mentioned how to build confidence in a way that your emotional capital is not getting affected.
I love that. So whether psychological or technical, when I was stalking you on the internet to prepare for this, I noticed you actually have your own thing kind of going, or a company that's about smart, like S.M.A.R.T. Is that the type of thing you teach in there, or what's that all about?
Yeah, that's actually something I started to develop, and I'll be launching it very soon. Smart Trader Systems. Well, basically, SMART is an acronym for the 5 skills that someone needs to learn in order to reach consistently profitable trading. So S stands for self-knowledge, M for market knowledge, first of all, learning yourself and then about markets. Then A is for action plan, basically a trading plan, putting all together into a plan. R is for repeat and review, which is probably the most overlooked part of trading, because everyone is very keen to learn a strategy, but most people are not that willing to spend time applying it. In the sense of practicing first. And then T stands for trader and a track record. Basically, that's the final step after you have gone through the repetition phase, having yourself certain criteria of pre-qualified criteria, and say, okay, if I in an X amount of trades, I have an X amount profitability, then I will go live. Because there are methods to go from demo to live. These are the 5 steps. So I basically created a framework, a rules-based framework, so how people can go from stage 1 to stage 5 using 2 tools. The first one is the strategy system, which is the way to learn how to trade, and then it's the support system, how to practice what you are actually have learned.
That sounds awesome. And you mentioned that it's not out yet, but it's going to be rolling out sometime in 2023.
Yeah, very soon. Actually, I have a small. If I can share this. Let me just share this. Well, this is basically the one of the 2 systems, how you can learn to trade, and basically at the lower level, the first is the macro business cycle, commitment of trader, sentiment, and seasonality. Then I go into the technicals, trend, momentum, volatility, and relative strength, and then I combine these into what I call the 4 S's of a trading strategy, which is the setup, the signal, the size, and the stop. So this is the way if someone wants to learn to trade and how to combine technicals and fundamentals into a concrete trading plan.
That looks very exciting. As soon as it comes out, I'm definitely going to be checking it out. And for everyone listening, if you happen to be interested, not only will I link that below in the description, but also just the information about his indicator, the S.M.A.R.T, where he's normalizing the volatility with reference to momentum. So I'll put that all there. But for anyone else who maybe has questions or just wants to know what you're up to, what's the best way to, I guess, either track what you're doing or just get in contact with you?
Well, that's very easy. They can visit my website and leave their email there. My website is first name, last name, www.alex.spiroglou.com. I also have a Facebook. They can find me on Facebook or through social media, LinkedIn, Twitter. I also have an account with TradingView. We'll be putting all of my material. Or they can, send me an email. So I'm more than happy to speak with anyone, and if they have any questions, I'm more than happy to answer if I can.
Absolutely perfect. And folks, if you're looking for any of that information, just look in the description below. I'll get all those links and that information for you. But Alex, on me and behalf of all the listeners, we appreciate your time. We appreciate you sharing your knowledge. Thank you so much. And hopefully we'll be talking again soon in the future.
Absolutely. Thank you very much, Matt. And you've been a lovely host.
Thank you so much. Have a good one.